All right. Okay. Let's make sure the audio is working perfectly fine. I think the playback is okay. There we go. All right. Welcome back, guys. Hello, hello. Hi there. Hi there, guys. We are finally back with the streams, the weekly streams from Tuesdays to Thursdays, as you guys should know by now. If you guys don't know when we are live, it's 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time, just to let you guys know. All right, so we're gonna begin right away. You guys have hopefully read the title and the description box down below, but I just want to simply go over where the markets are at before we see that CPI report coming in tomorrow. All right, and again, the CPI report comes out at 5:30 a.m. Pacific Standard Time or 8:30 a.m. Eastern Standard Time. All right. Just some of that water. Hey, what's up, guys? Welcome in, welcome in, welcome in. Ooh, 7 likes. Thank you, guys. Thank you. We're just about to begin. Come on in. Welcome, guys. Welcome. I may or may not sound still a little bit nasally, so apologies about that. Hey, what's up, guys? What's up? Make sure you guys hit that like button down below. All right, so let's first begin with the S&P 500 ETF, or ticker symbol SPY. So first of all, obviously we've been making a very nice, pretty controlled descending move to the downside, right? I mean, we have a very textbook downtrend, lower highs, lower lows. Okay, we even made that nice lower low yesterday at market open. And if you guys have not watched the most recent CFO Swing Watch Report's technical analysis video that was private but not public, make sure you guys go ahead and take a look at that. It's the very first link in the description box down below, or you can obviously just go to the channel and look at that very first uploaded, most recently uploaded video. And the reason why I want you guys to take a look at that video after the stream is that, well, we were literally on point with looking for a nice gap fill of the election reaction gap up, and we got that around 575 to around 574.50. So that was kind of the general area for nice demand to come back in, so that we can see a nice pivot, a very quick pivot and a bounce to the upside. And yesterday we opened up right at 575.77 with the low at 575.35. So that was absolutely on point. And so we're able to grab calls on SPY at market open, and we're able to again just absolutely snipe the strike price on those calls, because the strike price was at 585. And I even gave you guys this technical insight as well in that video, in the then private but not public CFO Swing Watch Report technical analysis video. And I told you guys that we could possibly be seeing a potential range this week from 574.50 to 585, or 575 if you guys just want to round up to 585. And so far from Monday to today, we've already made that entire ranged move. So what can we do to prepare for tomorrow as we head into the inflation report? Now, first of all, you guys need to know that whatever I say tonight should not be taken seriously. Why? Because everything can change during pre-market hours when the actual report comes out. All I want to do for this stream tonight, okay, I'm going to underscore this, all right, is looking at the technical analysis of the S&P 500. I'm going to be doing my own personal technical analysis like I always do, right, and give you guys levels that you need to watch out for to prepare for tomorrow. So first of all, I already gave you guys these two ranges that we need to look out for, but if we do see a breakout over 585 tomorrow, we need to watch out for a retest of the daily 10 or even the daily 21 SMA. So the daily 10 is my declining red line and my daily 21 is my declining light blue line. So both of them have just broken below my massive daily 50 SMA in dark blue. And obviously that's not good. Okay, short term, that is not good. But again, in the context of a potential breakout over 585, we should be seeing an initial retest of this daily 10 SMA, and that should give us a very, very quick either big move to the upside or an immediate rejection from this daily 10 SMA. And the daily 10 SMA closed at 586.84 today. And there is a possibility, if we do see a large reactionary move to the upside over the daily 10 SMA, which can occur whenever we do see an initial retest of a major SMA. And again, we've seen that over here, right? Between these two candlesticks and between these two candlesticks as well. Okay, or even on this individual candlestick right here when we saw a retest of the daily 10. So if we do see that very quick impulsive move over after reclaiming this daily 10 SMA, there is a chance that we could be seeing 590 to 591 as an immediate retest, and then a rejection back down as the daily 21 SMA continues to cover very, very close to the price, if and only if we do see a big move over to 590 to 591. Oh, I think I am... Okay, give me 1 second, guys. I think the audio is cutting out here. Okay. I guess we're not back yet because... Hold on a second, guys. Okay, I think we're back. Yes, we're back. Alright. Alright, okay. On my end, everything sounds good too. The replay there. Okay. Alright, sorry guys. But hopefully, maybe this might make some people be notified that we're live. But are we good here, guys? I know one person just said that we should be good. Give me a reaction, guys, if we're okay. Let me just check one more time. Okay, we're good. Alright, so as I was saying, okay, before I was interrupted with my audio on my end, So that's kind of what we have for the price for a potential reactionary move to 590 to 591. That is an area that you need to look out for if we do see the price breaking over this daily 10 SMA and having a very quick reactionary move to the upside. Now, there's actually further evidence, technical evidence, that we could be seeing another jump up higher if CPI was not coming out tomorrow, right? So let's just say we don't have the CPI report for December coming out tomorrow morning. From a technical perspective, from a purely technical perspective, based on the price compared to the RSI, we have a very nice bullish divergence forming on the daily time frame. So here's what I mean. We have, again, lower highs and lower lows on the price trend, but on the actual RSI, we actually have higher lows. Yes, we have lower highs. However, the RSI is now recalibrated back towards my quote-unquote normal levels or normal ranges for the values here, the RSI values of 40 to 50. And during that time, we've been making lower highs on the RSI with the price, which is, again, that's expected since it is a technical indicator. But what was not expected was that the lows that have been made here on the RSI is actually slightly trending up. So that is something that you guys should keep in mind, because we're actually starting to see this. Well, I personally am starting to see a lot of these bullish divergences occurring across individual names with their own technical indicator like the RSI or some other technical indicators that you guys might want to use, or you guys might use on your end. So with this type of action, right, it kind of tells me that under the hood of the overall markets, we might be seeing a lot more relative strength than meets the eye here. Because again, everyone is just watching the overall markets, right? But then they're not really looking at individual sectors of the S&P 500 individually every single time, every single day of the market, right? So let's go over some very specific sectors that I have been seeing where we're starting to see these type of bullish divergences on the RSI specifically. So the first one is XLU, the utility sector. So here is XLU. All right, so this one's an actual pretty textbook bullish divergence on the RSI compared to the price. So we have a lower lows price action, right? This low that was made yesterday is lower than the previous pivot low point around here. And if we compare this to the RSI, we actually have a higher low situation here, and the RSI is actually trending up. So this comes at a perfect time, since yesterday XLU was able to bounce and pivot right at this daily 200 SMA. Now, I was expecting for XLU to come back down to retest its previous resistance level or breakout level sitting at 73, but again, this retest of the daily 200 is perfect, right? I mean, we should be seeing a bunch of long-term buyers defending the price at this specific long-term SMA. So I love this nice pivot, this nice hold, and nice bounce today to confirm that yes, we want to see the price holding over the daily 200 SMA. Now, it's not just the XLU that has been seeing some great relative strength under the hood of the markets today. So obviously today, if you guys were following the intraday time frames of the market, we had some very rapid up and down movement, all the up into the close as we moved up higher to close out. And to me, that just seemed like either the markets were reacting to the CPI, maybe there was some sort of a leak, or it was just simply the algos, right? You guys should know about the algos now. These robots, these bots just trading very, very quickly between intraday ranges, getting in and out, getting in and out, getting in and out, right? And that's kind of what happened today. So if you guys want to take a look at the intraday time frame for the S&P 500, it's very interesting to see the very rapid increases in price and then decreases in price a couple minutes later. So go ahead and take a look at that. So regarding the sectors, we saw a lot of defensive sectors being, bid up today. I mean, since open, after making a very quick low, they just continued to move up higher. So XLP was another one, Alright, so this is the materials sector, and this one has absolutely recovered back to the upside as it has closed over its daily 10 SMA yesterday, and it has now closed over both the daily 10 and the daily 21 SMA today. So this is clearly some good strength in this XLB ticker, or the materials sector. And another very important sector is XLI, the industrial sector. And this one is, again, very important because the industrial sector is kind of pertinent towards gauging how the overall economy and kind of the health of the overall stock market as you look at the overall markets. And so with this individual sector, I love the fact that it has acted just like XLB here by reclaiming its daily 10 SMA yesterday at close, and today it reclaimed both of its daily 10 and daily 21 SMAs. So this is a great sign, right? With the XLI itself reversing to the upside and officially confirming it by breaking over these two declining short-term SMAs, it seems like we have an upside trend in our hands, right? An uptrend. So, these individual sectors here are showing strength, and even just the XLE, right? The energy sector has been on a tear ever since we formed a nice pivot around $84. I highlighted this back then as well. And so it held this $84 level again, making a nice double bottom from this pivot point back in September, right? Early to mid-September, and then to now, right? In late December. So all these defensive sectors just continue to uphold really, really well. I mean, even the real estate sector, right? Very nice bounce, very nice bullish engulfing candlestick yesterday, even if the overall markets were down, right? It seemed like, the overall markets weren't really down yesterday. What am I saying? But when we saw today, with all this very volatile price action, either because of algos or because of a potential leak in the CPI, we're seeing we're just completely seeing these defensive sectors and just overall just leading sectors as well. For example, like XLF had a very nice big move to the upside today and yesterday, and it continued that move today by closing over its own daily 10 SMA. So there are a lot of hints showing that maybe this move down in the overall markets, this nearly 5% move down from its current highs, isn't a potential waterfall moment where we see further decline, potential another 5% decline from highs, giving us a textbook 10% correction. But again, I'm just saying this for now. Don't take it seriously because, again, everything can change tomorrow morning once the December CPI report comes out at 5:30 a.m. Pacific Standard Time, or 5:30 a.m. or 8:30 a.m. Eastern Standard Time, right? So with this move lower, okay, here's what I'm thinking, right? So I mean, a 5% move from all-time highs, right? That's not bad. That's not too bad of a correction here. And if you want more, if the markets want more of a correction, fine, we can have a 10% correction. Okay, and that'll bring us to around 550. Okay, but this alone right here is okay, right? It falls in the textbook range of the percentage textbook range of a technical correction. So if CPI is okay, if the overall markets think that the core CPI and the overall headline CPI looks great, if you can regain that trend of disinflation rather than plateauing out and flatlining, then we should be good. That's all I'm going to say tonight. All right. Now, there are other indications in the overall market's price action today where we could possibly be looking at a market bottom forming right now. Okay, and again, tomorrow might just be the catalyst, an event for that bottom to occur, right? So first of all, let's look at IWM. If you guys take a look at the 1 second here, guys. You guys take a look at the live stream before you guys clicked on the video here. You guys should see that the picture in the background is the IWM, right? Russell 2000 weekly time frame chart. And I don't know if it's daily or weekly, but it doesn't matter. All that matters is that it was the Russell 2000 in the back, right? In the background of my my thumbnail for this live stream. Okay, so the reason why I put that there is that, well, IWM is surprisingly doing extremely well on the weekly time frame by upholding this weekly 50 SMA, this dark blue line here, and it has been for the entirety of, all of 2024 and also 2025 so far, even if last week's bearish engulfing candlestick was looking pretty bad. So I'm glad that it was able to uphold and pivot away from this weekly 50 SMA. However, the main point of me showing IWM to you guys is that on the daily time frame, look at how IWM has performed compared to the S&P 500, right? So both have ended up in positive territory, numbers-wise and percentages, but just the overall price action and how the daily candlestick looks compared to IWM and SPY is, well, there's a clear difference, right? We obviously have a lot more strength, relative strength, and a lot more bidding coming into IWM before the close today. And thanks to this relative strength, it was able to close over 1%. And to me, that kind of signals a potential for inflation for possibly coming in light, not beating expectations. And that can cause a reaction in the markets to say, hey, maybe the Fed's in the next FOMC meeting, which is going to be this month, and maybe even into the next one after this month, which is going to be on March. Where again, we have FOMC meeting in January, and then we're going to have another one in March. Maybe they can also provide some more insight that with inflation going down further, even if the economy is still very, very strong, as you saw with the jobs market, the labor market, we should be still seeing from the Federal Reserve that they're going to continue with this rate cut policy, right? This rate cut cycle, and then monetary policy to continue to possibly loosen up a little bit more after having such, I think, tight, I think the past, 2 years, around 2 years of tight monetary policy. So, maybe that can give some confidence back into the markets that the Federal Reserve, even if they might still stick towards a lower rate of cutting or lower frequency amount of cutting interest rates, we can still be seeing the Federal and overall conclusions to those actions, and that we can continuously see the favorable conditions that the Federal Reserve wants to see and wants to create, so that they can, head into their goal for this fiscal year. Right, so that's kind of what I'm hoping for as well, especially with IWM, actually, just significantly, and especially with IWM acting like this into inflation. The inflation report tomorrow can be a huge key sign as to what we can expect tomorrow as far as the market's reaction. Right, so obviously I don't know what the official data will be, the actual data versus the estimated data, and how we will react to it from market's perspective. But again, based on how the overall individual sectors that I just went over and how under the hood of the S&P 500, we're still seeing some very good relative strength and good bids to the upside, along with the fact that we're seeing IWM performing very, very strongly today compared to the Dow, the S&P 500, or even NASDAQ, clearly tells me that, hey, there is something going on here and we should be watching out for a potential big move to the upside. Alright, and that's the reason why I began the stream with the technical analysis for SPY in the event that we do see a rapid reactionary move to the upside during pre-market hours all the way up into market open. Alright, so again, 590 to 591 will be a crucial area for you to be looking at. Alright, now maximum, if you guys want a maximum target for the S&P 500 or ticker symbol SPY, will be 592. Alright, so right here, if you guys want to take a look at it, right over here. Okay, 592 on the daily time frame. All right. Excuse me, guys. Ooh, Need that water. Hey, 9 likes. Thank you guys. Thank you. Let's see if we can get to 10 likes there. But anyways, hopefully you guys are understanding what I'm saying. Again, apologies about my my nasally voice. I'm still in recovery mode, but I'm nearly there. So hopefully by Thursday I'm okay. But with that being said, okay, I want to go over one more thing before I end the stream tonight. All right, so another, yet I would say even more important indicator for a potential move up higher tomorrow off of a potentially good CPI report is the bonds market. Right, so today, okay, the 10-year yield and the 30-year yield barely budged higher, even with the overall equity markets moving lower intraday. And so that's the reason why I've stated earlier that, hey, it could be just algos moving the price up and down very, very rapidly as they enter in and exit constantly back and forth, or the fact that the overall inflation report for December, the CPI report, came out and maybe there was a leak, right? But based on how the overall bond markets were moving today, on the backdrop of the equity markets moving in a very volatile manner, I would say that even the bond markets may be anticipating a more positive reaction to the overall CPI report. And so if you're going to take a look at TLT, the 20+ year Treasury bond ETF, TLT came back down to retest my major significant level at 85 today. All right, I mean, this is a level that I've had since 2023 here, and it goes all the way back to, I think this level goes all the way back to since the 2000s. My God, right? So very, very critical level that I've outlined here, and also the 81 as well. But again, I don't know if you're gonna reach 81. Who knows? But with the recent big drop in bonds, right? I mean, this is a huge drop so far. It seems that way, right? But with this nice strong pivot today, just on this day alone, as we head into the overall the overall last inflation report for 2024 tells me that there could be something positive cooking up into tomorrow morning. And again, this is just my last observation here as we head into CPI. Again, take my words that I've said tonight very, very lightly. Just look at this from a pure technical angle. Don't take it as something that you guys should be following for weeks to come or months to come. I don't know if you have to buy the dip now, but again, we've been playing the ranges. We've been playing the technical ranges perfectly, like we did yesterday when we bought the 585 calls on SPY, and we rode it all day into market close, and then we ended up closing today morning at market open at 585. So perfectly on point there. If you guys follow me, if you guys are part of the private CFO Discord, and again, you can gain access to the private CFO Discord by becoming a reader of the CFO Stream and Watch report. Okay, if you guys want to join, click the link down below that says, well, the CFO Stream and Watch report, or you guys can simply DM me on Instagram as well if you guys want to ask some questions first. I'll be willing to hear and willing to answer. So with TLT or even IEI, this is the 3 to 7 year Treasury bond ETF, or even IEF, right, the 7 to 10 year Treasury bond ETF, they've all held the lows from yesterday or their own lows today, right, the low of the day, and they ended up closing very, very nice, right? I mean, they're not affected by how the overall equity markets have been doing. So this got me scratching my head. Hey, whenever I do see the overall bonds, right, the bond prices acting fairly well compared to equities or futures markets, whatever it is, compared to the bond markets, it lets me in on a little hint that there could be a possibility that we could be seeing a very good, optimistic reaction into the CPI report. And again, tomorrow will be a very critical report since it is the last inflation report for the fiscal year of 2024, and that will set the tone as what we could be expecting for January's inflation report that should be coming out next month. Okay, mid next month. So you know, for this bond action, right? This just tells me that, hey, if bond prices are sitting relatively strong, maybe the overall bond markets are expecting some relatively good, or maybe even flat, you know, actual data compared to the expected data right now, and maybe the markets will like that. And why would the markets like that? Well, because the markets are always moving in anticipation for the future. And what does the future hold for us? Well, the first major FOMC meeting from the Federal Reserve that should be coming in the next week, in the next couple of weeks, okay, or next week actually. So they're into the end of January. So the markets are basically going to be potentially in air quotes, looking for the Feds to be a bit more optimistic compared to December's FOMC meeting, where they absolutely tanked the overall equity markets from their huge shift from a dovish stance to a more hawkish stance. So maybe they might flip-flop back to a more dovish stance based on how the December 2024 CPI report goes. Okay? Does that make sense? Do I see any reactions here? Anyone? Oh, there it is. All right. So again, this stream may have not been applicable or you know, too insightful, but that is my own personal thoughts, and that's how I am heading into the CPI report tomorrow morning. Okay, and hopefully you guys can follow me along with that mindset, and with that mindset, you guys can also apply that with your own trading. Okay, so again, we are currently in a 5%, a little over 5% textbook pullback, if you guys didn't know that, from all-time highs. So we are in a textbook correction, if you guys didn't know, because again, I've always stated this over and over again, a textbook correction consists of either a 5% correction through 10%. Okay, so it's a 5% to 10% range. Okay, and currently we are in a correction, if you guys didn't know. Alright, so again, look out for the levels that I've given you guys. Again, the max level that I want to see for a potential bounce tomorrow will be 592, but the most important levels will be 590 to 591. Does that make sense? Alright, so again, make sure you guys watch the then private but now public CFO Swing Watch Report's technical analysis video that you guys can see down in the description box down below. Okay, again, everything can be found in the description box. It's going to be the very first link for that video, and then the next couple of links will be, well, it's pretty self-explanatory. Right, if you guys can read, right? And I know you guys can read, but if you guys want to join the CFO Swing Watch report and become a reader and be automatically put into the private CFO Discord community, make sure you guys take a look at the link down below, or simply DM me on Instagram, because if you guys take the time to DM me on Instagram, well, you guys will be getting a very, very nice 50% off discount code for your first 30 days. Again, I am not just saying this, I'm just taking the words out of my reader's mouth, okay? Or mouths. Lips, I guess I should say. It is 100% worthy. Alright, you guys will not regret it. Alright, it's worth your time, okay? Worth your money. I don't know how else to say it, right? I mean, that's what I've heard. Okay, that's what people have told me. So, I'm really just telling you guys all the different things that people have said to me over the last few years, okay? So again, overall, 100%, you guys will not regret it. It's worth it. It's very, very worth it. If you guys want to become a reader and a member, again, all you need to do is simply DM me on Instagram for that opportunity, or you guys can just look at that link down below. You guys should just go towards the section that says the CFO Swing Watch Report and the CFO Discord community, and you guys will see that link down below. Okay, so pretty self-explanatory. All right, well, I mean, that's just it for tonight. I mean, good luck tomorrow. Hopefully you guys will understand why I'm saying all this tonight, and based on everything that I've seen so far and everything that I've explained to you guys, literally, I mean, this is just what I'm saying. This is the well, face value, literally only face value analysis that I'm giving you guys, because again, there's nothing else, there's nothing deeper here. I'm only looking at this from a technical angle, so do not read into it. I'm not giving you guys a clue as to a potential underlying or under the hood explanation. This is just simple, non-sophisticated analysis and observations that I'm looking into as we head into the CPI report tomorrow. Okay? Right? So again, check the S&P 500, check the Russell 2000, check the bond markets, just like I did tonight by showing you guys all these different time frames, all these different tickers, and obviously all the different individual sectors that I've given you guys as well, right? So XLU, XLE, XLI, very, very important. XLB, also important, all right? So again, it looks like under the hood of the overall markets, everything looks very, very bullish. Okay. All right, so that is it for tonight. Hopefully, I can be fully recovered by Thursday, and hopefully we're back to doing these streams every single week. I really missed out doing these streams since I think it was just, what was it? It's been a week. Yeah, it's been a week of me not doing these streams, so I want to get back into the groove again, and yeah, just join us again on Tuesdays and Thursdays at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Again, apologies about my enunciation of some words or just my overall sound of my voice. I'm still very nasally, it's kind of hard to talk. So again, thank you guys so much for watching, for your understanding, and again, for all the support that you guys always are constantly giving me. And oh, by the way guys, we're almost at 500 subs. Amazing. That's half a thousand. Half a thousand subs. So we're about to reach a huge milestone. That's incredible. I love the fact that people are actually interacting with the content here and all the information that I give you guys. And again, hopefully I'm always giving you guys some very important, very good, but most importantly applicable information. All right, good luck tomorrow, and I'll see you guys on Thursday. And yeah, thank you so much for watching. Have a great rest of your night.